Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. And today, you know what, I thought I was going to talk to the options traders in the crowd. I'm going to be going through what I consider to be my top 5 tools on Thinkorswim for options traders. I think that there's going to be some very interesting tools we're covering. We're going to be giving a good introduction to each one. I'm going to provide some additional resources for a deeper dive into each one at the conclusion of the session, but keep an eye out. See how many of these would qualify for your top 5, or give me some feedback. Let me know if I've missed something that you think should be included. But in any case, a lot to cover. Before we get to any of that, though, let me first of all say hello to everybody who's already chatting in out there on YouTube. Hello there, Greg and Ask a Coach and Ricebird and Juan, Eva, Lakshmi, everybody else. Thanks for joining us week after week. We really do appreciate your attendance and your contributions here in these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, after this webcast is concluded, well, enjoy that recording, but be aware that you're invited to join us in the live stream. If you'd like to be here, we'd love to have you here as an audience member. This is a Wednesday webcast series. We'll kick things off promptly 2 o'clock Eastern time. We really would love to have you here. I also want to let our live stream audience members know that my very good friend Kevin Horner is going to be hanging out in the chats. Kevin's going to be addressing any questions that I can't get to just during the flow of the presentation. Thanks for having my back there, Kevin. And Kevin and I would like to issue an invitation to everybody watching, everybody listening. If you have an account on X, you should be following your favorite presenters there on X. It's the best place to connect with your presenters in between these live streams. So you can find Kevin on X at Kevin Horner CS. You can find me on that platform at Cameron May CS. But let's get into this discussion. And of course, as we do, we're going to be introducing some example strategies, some example trades, and that involves risks. So bear this important information in mind. All corporate or issuer names and market data shown are for illustrative purposes only and are not a recommendation, offer to sell, or a solicitation of an offer to buy any security. Options carry a high level of risk and are not suitable for all investors. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. And for some products and strategies, loss of more than your initial investment. Okay, so let's set the agenda for today. Today is all about Coach Cam's top 5 Thinkorswim tools for options traders. So I'm going to be going through each of these tools at hopefully at a pace that everybody can follow. I'm going to deliver this at sort of a beginner level, but I want to provide also some additional resources that can supplement your understanding of these tools after we're done. So let's get into the demonstration of the tools. Let's go right to the Thinkorswim desktop platform. Here we find ourselves on a chart of the S&P 500. It looks like a pretty good start to the day, a little bit of a fade. But let's go look at some tools for those options traders. And I'm going to start with our scan feature. Some great scan tools here. It can be a major frustration, point of frustration for an options trader or a trader of any stripe. If they have in mind what they would like to trade, they just can't find any suitable candidates for that style of trading. So the scan tools are one powerful tool that might assist that options trader toward that end. And I'm going to be using for today's example our Stock Hacker. Yes, even for scanning for options trade candidates. I'm going to use a few example criteria here that a trader might be looking for. Now, first thing that we might do is we can direct the scan to a specific area of the stock marketplace. We can look into existing portfolio or existing watch lists. We can search or scan through watch lists that are maintained and published by Thinkorswim, and that's what I'm going to do here today. Let's direct this scan to look for stocks that are just in the S&P 500, and then we're going to describe specific characteristics that may be important to our example options trader here. Now, obviously, every trader should feel that they can be flexible in entering their own criteria. These are just example criteria. But one thing that an options trader might really emphasize is that there's a lot of liquidity with a stock. And most of the companies in the S&P 500 have pretty strong liquidity, but liquidity can be strongly tied to the market capitalization of a company. So let's put in a market capitalization requirement here. Let's use the default menu to put in a stock criteria, market capitalization. What if we set that at a minimum of 5,000 million? Notice our market capitalization is in millions of dollars. So this would be $5 billion or larger, right? Another stock requirement to continue to whittle down that field might be, and by the way, when we're looking at the S&P 500, they're generally going to be that large. We could even let's crank this up a little bit further. How about we say, can we be more demanding? Can we say $20 billion companies? Let's do that. So out of the 501 component companies of the S&P 500, 371 meet that criteria. What about the price per share? For some options traders, they prefer to maybe they don't trade the lower price stocks because there tend to not be very many options to choose from, very many strike prices to choose from on those lower priced securities. Trading options on higher price stocks can obviously come with larger obligations when selling options, or expose one to greater risk if we allow things to get the expiration, as an example. But in any case, whatever the motivation might be, let's say that our trader has a preference for, let's say, a market value of their stocks to be somewhere between, I don't know, a minimum of $100 per share, and let's say a maximum of $300 per share. So as we put this together, we can see there are 208 companies that meet that requirement. There are 372 that meet the initial requirement. And there's going to be an overlap of those companies, kind of like what you think of like a Venn diagram. So some are going to meet both of those criteria. Now let's get a little bit more specific to the options traders. One of the features here is known as a sizzle index in the criteria in the drop-down menu. The sizzle index is really, it is, as the name implies, it's looking for options that are kind of sizzling right now, options that are getting more trading volume than average, as defined as the average over the last 5 days. So if I were to put in, let's say, a minimum sizzle index of 1.5, that would say look for stocks that have at least 50% more options trading volume today than on average over the last, or as compared to the last 5 days average. So that's how that might be interpreted. So we're looking for highly liquid stocks, priced between $100 and $300 per share, with kind of unusual options trading volume. Now, not every trader is going to emphasize these specific criteria again. But finally, just to show that the trader can take it even a step further and scan for not just stock-related information or options-related information, we can even scan for chart performance. Let's go up here and select our add filter. And I'm going to add a study filter, which is a technical study from a chart. And you've seen me probably do this before, where we get this menu of potential technical studies. And some of those are included in the category called price performance. What has price been doing recently, or where does price fall on a recent scale of prices? And this is what I'm going to choose for this one. Let's select price performance. Near high lows is going to be our category. So this is a price filter where the trader might be able to specify, well, if we're looking for bearish options trades, maybe that trader might be looking for stocks that have been trending down, possibly close to 52-week or 1-year lows. For a bullish trader, maybe they're looking for something that's been trending up, maybe trading at or near 52-week highs. So I'm going to select near high lows. The current price is within, let's say, 5% of 252-day highs. 252 days is just how many days there are in a typical trading year. And that's it. So that's just a quick example scan, but this can really, and again, just an example scan. But if a trader knows what they're looking for and they have the tool that can help them to find it, that can really accelerate them toward their ultimate objectives here. So let's click scan. And it looks like out of our 501 S&P 500 companies, there are, about a dozen that meet all of our criteria. It looks like we have Alphabet right there at the top. Now, these are sorted right now according to market capitalization. How about we use Alphabet as our example? Let's go to our charts. and move on to, let's call that top tool number 1, which is the scan capabilities on thinkorswim. Top tool number 2 is a tool that might assist a trader in gauging how changes in the 3 variables that can influence the success or failure of a trade, how they might impact the trade that that trader is considering. So let's look at Google and just set up an example trade scenario. It looks like it's had a strong day, so not surprising to see this sort of movement on a stock that is seeing a lot of sizzle in their options trading. Let's say that our trader sees that Google has been going up, just recently gone past all-time highs, established new all-time highs, and something has traders excited to the extent that it's caused a gap up. And a common assumption among technical traders is that the top side of a gap will likely act as a price floor going forward. Not a guarantee, of course, but let's say that our trader thinks that this is likely to carry momentum forward. And maybe they're planning to place a trade. Let's say they're thinking of doing a bullish option trade, I don't know, maybe for a month or so. Let's switch up our time frame here for just a moment. I want to go out to a 3-year weekly chart. And as we look at this, we're now looking at each candle representing a week. And what we might notice if we look at the scale over here to the right is that each month has featured a range of about $20. So when Google gets a mind to get up and go, it typically travels, at least in recent history, goes up about $20 over the course of a month. Now, it could go down $20 over the course of the next month. Time will tell, but let's say that our trader thinks, ooh, we just got a nice burst of momentum. Maybe I'll go buy a call option. I wonder how that call option is likely to perform if the stock goes up $20 over the course of the next month. What sort of returns might that deliver? That's going to take us to my top tool number 2, which is known as the theoretical price tool. How many of you have used the Theo price tool? It's a tool that a trader might use to gauge how much their option trade might change in value based on anticipated changes in price and time and volatility. So let's pop over here to our trade tab and start to build an example trade. So if the trader is thinking of being in a trade for, let's say, a month, this is not the way everybody does it, but a common approach for selecting expiration is to double that, to make sure that we have an adequate amount of time to complete the move that we're expecting, and maybe to get out before time decay really kicks in on that trade. So let me open up the 21st of November. Those contracts have 79 days on those, roughly twice, a little bit more than twice as much as a month. So I'm going to open that up. And as I do, I'm going to hit the pause button on the presentation before we get to this top tool number 2. Eva, thank you for pointing this out. But Eva says, Cameron, there's a survey that's been added to the chat window. Yes, so if you're here in the live stream audience, there is a survey link that's been added to the chat window. If you do me this favor, click on that survey link. That'll have the survey ready for you to fill out after the webcast is concluded, and you can give me some honest feedback at that point. I always appreciate that. I promise you, if you take the time to fill out the survey, I'll take time to read through those comments that you might leave. It's only 2 multiple choice questions in a comments box and a suggestion box. So a really simple, a really short survey. But yeah, it's always appreciated, and I will get that feedback. All right, so thank you for doing that for me. But let's go back to our example trade. And with our stock trading, Google looks like it's trading right close. It's at about $229. Let's say that our trader is considering buying a $230 call. Right now, that's priced between $13.80 and $13.85. But the question is, I wonder how the value of that call option might change if the stock goes up $20 over the course of the next 30 days. Just an example scenario. But I'm going to come up here to our current layout. And by default, we're going to be seeing columns for the last price, abbreviated to X, and the net change. And I'm going to change that to Theo price. And Theo price is essentially a calculator that allows the trader to input expectations for price and time, and also for volatility if they prefer, and it will give projections for how that would change the value of our option. So keeping our eye on that $230 at the money call, let's come up here, click on our Theo price calculator now, and I'm going to change the date. Right now is September 3rd. Let's push that out to October 3rd. And let's adjust the stock up $20. So what this immediately does, once we've entered those new parameters, we can now look at this column that says Theo price, and for each strike price, it's going to calculate the change in values under those assumptions. Now, we could have changed volatility. We could have changed volatility as well. If, let's say, the trader expected volatility to rise or fall. But for today, just for simplicity's sake, let's keep it to just price and time. And that $230 call that we were looking at buying for, $13.50, something like that, if we got a $20 bump over the next 30 days, would be worth about $23.50. Or in other words, pretty close. Well, we'll just call it about, a 70% return? Now, obviously, it could go the other direction. We might want to subtract some money, subtract some dollars from the current price of the stock, and we could project potential damage to the option. But that Theo price tool, nifty tool for options traders, it answers big questions, and it is accurate, assuming our assumptions are accurate. Now, that's a big assumption. But yeah, it's built on the same models that actually price options. So if our assumptions are accurate, the outcome is accurate. Okay? Anyway, so nifty tool number 2, we'll call it top tool number 2. So first one was to help us find trades. Second one was to anticipate movement in the value of trades. But that Theo price tool, kind of nice for individual single leg options, but option strategies can get complicated fairly quickly. And the trader might be asking themselves, gosh, it should just be nice if I could just see a chart that shows for a complicated option strategy the potential for profit or loss. That brings us to cool tool number 3, which is our risk profile tool on our Analyze tab. So let's change up this scenario just a little bit. Let's say instead of just buying a long call, what if we were doing a long call vertical spread? Let's change up our expiration just to mix things up. How about we go to the 17th of October, and maybe instead of buying an at-the-money call, let's buy an in-the-money call spread. So that would be maybe the 220, 225. Obviously, we use a different pairing of strikes, but let's go with that, 220 and 225. I'm going to first go up here to where it says spread single, and let's change that to vertical. That's going to allow us to do a one click. Let's just click on that ask price. That creates a buy order for a 220, 225 vertical spread. Now, just to keep the math simple, let's dial this down to just one contract. And let's analyze the profit or loss potential of this trade. Now, those of you who are very familiar with long call vertical spreads could probably just do this math in your head. Hey, it's a $3.20. Let's lock that in. Let's say we're paying $3.20 for this $5 wide spread. We know that leaves $1.80 over for return potential. That's nice, but it can be extra nice to see it all laid out on a chart. So once I've created this order, I can actually just right-click on it and analyze this trade. And that's going to take us right to the risk profile. It's possible if you're following along at home, if you were looking at some other tool on the Analyze tab, it might take you to that tool. So we'll just click on risk profile. And this is now showing us a profit and loss chart for this trade that the trader is considering. And specifically, we have 2 lines here. These lines are showing us potential profit or loss as displayed on the y-axis of our grid chart here against potential price movement on the stock. So we can see a vertical line here as a visual reference point to tell us that right now our stock's at 228.69. Well, what if the stock went up 230, 240, 250? Or what if it fell to 220, 210, and so on? How would that impact our trade at expiration? That's this line. Or at some other date. That's this purple line. So this is known as the risk profile tool. It's interesting. I might rephrase this and call it the risk reward profile tool to be more complete in the description. But let's just focus our attention on this green line. If we buy the 220 and 225 vertical spread, our veteran traders in the audience here know, well, that thing maxes out above 225 at expiration, and it hits its maximum theoretical loss below 220 at expiration. And this is just drawing that in for us. So we can run through hypothetical price scenarios. What if the stock were at 230 at expiration? Well, I can see that intersects with the top end of this profit and loss chart, intersects right over here with about $180, which is the maximum theoretical reward. As a matter of fact, as I point at that line at 230, I can look at the number down here in green, and that says, hey, we have a 180 profit as of the October 18th expiration. Well, what if we're down below 220? What if we're at 215? Well, now we're looking at a $320 loss. What if we're in between, at some point between 220 and 225 at expiration? Well, that will be short of max gain. It'll be above max loss, and it just depends on where the price lands at expiration, whether we're looking at a relatively smaller gain or a relatively smaller loss. And in between, we can see a red dash that tells us the break-even point for this trade, which in this case is 223.20. So a nifty little chart here that gives us a breakdown of the profit potential for the trade. Now, I'm not going to explore every feature of each of these tools. I wanted to give an introduction to these tools, but I will, again, as I mentioned at the outset of this discussion, I want to give you some resources to explore these tools further. One thing I do want to show you here, though, is our trader may just want to know, well, what are the probabilities that this trade actually works out as I expect? What are the chances that we might lose the maximum, we might encounter the maximum loss of the trade? All of those can be explored using this probability date up here in the upper right. So I'm going to set this to the expiration for this option. So this contract expires October 18th. So if it wasn't October 18th, I could just change that price right there. And then I'm going to do three things here. I'm going to use these vertical lines here. I'm going to move 1 to 220. That's the lower end of our trade. I'm going to use another one. I'm going to set that right at the break-even point of our trade. And the final one, I'm going to drag over and set it up at the top end of our trade, the 225. And what we'll now see are these numbers, 35.68, 5, and 56.16. What are those? Well, those are the probabilities of landing in max gain territory. So in other words, above 225 on October 18th, about a 56% chance this trade works out exactly as expected. There's about a 36% chance that we fall short. And there's in between, there's going to be 35 plus 56 is 91. There's going to be about a 9% chance that we fall somewhere short of maximum gain or just experiencing a loss, but not maximum loss. So there's a quick introduction to this powerful tool for options traders. Obviously, a lot more to learn about this tool. I have a video for you. If you want to go watch that, it's much more in depth. I'll show it to you at the end of today's presentation. But I'm going to call that top tool number 5, the risk profile tool. This one's kind of complicated, though. I'll give you that. It does have a bit of a learning curve. I'm going to show you now one. We're going to pump the brakes, slow it down, and introduce ourselves to a tool that's, I think, initially just a lot quicker to learn. And this is the probability analysis tool. It's housed right up here, just to the right of the risk profile tool. If I go to probability analysis, I'm presented with, it can look complicated, something known as the probability cone. Well, that sounds, or also known as if we really want to sound cool, the probability parabola. But really, this is just an intersection of different price levels and different time frames, starting with today. So 0 is today, 10 days out, 20 days out, 30 days out, 40 days out, and so on. And along that way, we can see other lines that represent expiration dates for contracts on Alphabet. And so the question that this can very rapidly address for our trader here is, if they have a trade that can succeed at a certain level at expiration or fail at a certain level at expiration, well, all we have to do is move our crosshairs to that time and that price and see the probabilities of success or failure just displayed mathematically. So as an example, this 220, 225 vertical spread at expiration, which is that third Friday of October, you can see it actually right here. The trade does best above 225. It does worst below 220. So I can go to that October expiration and just move my cursor up to 225. And if you look over here, you can see it intersecting that gray box is showing us the potential price level. Let's get it up there as close. There we go, 225. I'm going to take my hand off the cursor there now, and you'll notice right at the intersection of our horizontal and our vertical crosshairs, there are two percentages, 56.44 and 43.5, or pardon me, 56.47. It's actually moving a little bit as price is moving behind us. Anyway, about 56.5 versus 43.5. So what that's telling us is there's about a 56.5% probability that if we just put this trade on and we let it go to expiration, about a 56.5% chance that we're going to be above 225 at expiration to some extent, just somewhere above 225. And this trade is in position for its maximum gain. If I move down, let's snug this down to 220. Just want to keep it at the same expiration. There we go. Close enough. A few pennies off. That's okay. It looks like about 36% probability of having maximum loss if we just put the trade on and let it go to expiration. So this tool doesn't require any fancy setup. We just make sure that we go to the Analyze tab, the Probability Analysis tool, type in our symbol, and then it's just moving the crosshairs around and positioning them as, correctly for what the trader is trying to learn about the probabilities. That can have all sorts of potentially impactful implications for all sorts of strategies. Iron condors, vertical spreads, long calls, what's the break-even probability, all of that stuff can be analyzed very quickly here. So we'll call that top tool number 4. Now, my final tool is addressing the situation where a trader might be looking at Thinkorswim and thinking, this is a fabulous tool. I want to start learning about trading options, getting as much experience as I can. So I'm going to place a bunch of options trades today, and then I'm going to sit back and wait and watch the clock turn and see how adept I am at options trading. Let's see how these trades go. So if we place a trade that we're maybe planning to exit a month from now, we might have to wait a month to see how it goes. Well, that can take a while to acquire a lot of experience with options trading, or Thinkorswim's live trading platform, this is only available on the live platform, has sort of a time machine built into it. It's known as the on-demand feature. Let me know, are you familiar with on-demand? And Deepak says, would this work only if you have a position in this stock? Deepak, are you talking about the probability analysis? Nope, actually. It can just be an idea that the trader has. All they have to do is type in the symbol, and we get this probability analysis cone. By the way, didn't even explain what the cone is. That's just showing us a 68% probability that price falls within a certain range at a certain time frame. It's one standard deviation. That might be getting a little bit heavy for some traders here. That's okay. But even if we don't understand that, we can know how to just reposition the crosshairs. Okay. All right. Ricebird, you're not familiar with the on-demand feature at all? If this is a new tool to you, it's a pretty cool one. What this allows the trader to do is hop in a little bit of a trading time machine, roll the clock back, and start trades as though we were trading back in the past. Greg says, somewhat familiar. Let's do this. Let's just clean things up. You don't have to, but I'm just going to close out this example trade. But we can launch this from anywhere in the live platform, this on-demand feature. So as I click on this, you'll notice it's right up here in the upper left, it's saying pre-buffering. What this is doing is this is modifying the whole platform. Now, there are some tools that aren't modified, but a lot of the functions on Thinkorswim are now going back in time to a date that we will select. But this is just loading up all sorts of historical price data and preparing for us to trade as though it's a different date in the past. So this is a little description of how this thing works. It just shows up when you first click on that on-demand feature. It says, you've just started Think on Demand, a powerful back testing tool that lets you replay any trading day from the last several months. Guys, it goes way back further than the last several months. I've actually looked into it. It's more like 15 years. Anyway, from the last stretch of time, and test your trading skills with simulated trades based on that historical data. The capabilities of this tool include running Think on Demand at 24/7 at your convenience, even on nights and weekends. You can select a previous trading day in the upper left-hand corner, as well as fast forward. It's actually in the upper right, just so you know, and pause the data or reset virtual account. You can trade this as though it's its own separate paper money account, basically. You can watch the tick-by-tick price changes for stocks, futures, and options. You can simulate trading different securities and derivatives, just as you would in a live account by clicking on the bid-ask prices. You can watch the profit or loss of the simulated positions on the position statement as the trading day proceeds, tick by tick. Or you can fast forward to another date. And you just click on the on-demand button again to go back to your real live trading account or back to paper money. Well, no, not back to paper money, real live, because it's only available online. Anyway, let's click OK. And let's go back in time, but I'm going to change things up a little bit. Let me switch my chart here to eBay for this example. There's a reason why. It's because I placed an example trade on eBay before launching this webcast. But up here in the upper right, you can see, as of the date of this recording, this is September 3rd. That's when I'm doing my webcast. But my date here says August 29th, and it's advancing 1 second at a time, because this allows us to go back in time to find historical trade data and then trade according to those timeframes. Let's crank this back. I'm going to click on this on the date, the default date, and we can go back a year at a time by clicking on the double arrows. Let's go back to 2022. And how about we just stay with August, but we can go backward or forward a month at a time by clicking on the single arrows. I want to go back to, let's say, August 18th. Okay. Now I can be really precise. If I want to go to August 18th and a specific time of day, I can do that. I'm not going to be that finicky, but let's click go, and you'll see it's now saying pre-buffering. It only takes a few minutes here, but it's just loading up information, including this is now an eBay chart that ends not September 3rd of 2025, but it's now ending August 18th. This is a weekly chart. Let's switch it to a daily chart. There we go. And now it's like the whole platform just went back in time. And now the trader can go place trades and then advance in time and see how the trade worked out. We can look at the charts to see what happened with the charts. Let's say that our trader here is looking at eBay. It was having a rough 2022. Lower highs and lower lows. It looks like maybe coming up against a resistance level right here. And so the trader could go place a trade. I could go to, let me close this up a little bit. Anyway, go to our options chain. And this is now, you'll notice the dates, 19th of August of 2022, 26th of August of 2022. We are now trading back in 2022. So as says, please show again how you got the on-demand tab. Well, if you're looking at this on your paper money, it's not going to be there. It's by default, it just appears in the far upper right on the live Thinkorswim platform. Now, a little navigational tip here is to launch it, we click on that on-demand tab, on the on-demand button, and to turn it back off and go back to real time, we just click on on-demand again. But here's one thing I ran into once, and it confused me for a moment before I figured it out. If you have the left column open, And if it's too wide, the button disappears and you're stuck in the past. You are now Marty McFly looking for a flux capacitor. Okay. No, what's actually happened here is there's just not space to fit that button on there. If we just move the left column to the left a little bit, there is our get back to real time again. Or we can just hide that left column, right? In any case, the platform now just works like the normal platform. So to place a trade, we just place the trade in the normal way. Click on the ask price to buy an option, click on the bid price to sell an option. But when we place that trade, we can then go monitor its progress on the monitor tab. And as an example, this is interesting, I placed a long call option on eBay as though I purchased it on August 11th of 2022. So now we're looking at August 18th. So I can see, oh, I bought that long call option for $1.30. It's now worth $1.48. And if I wanted to, I could push this forward a week. Let's click go again. And it's going to load up the new information for the 25th. And in just a moment, you'll see the market value of our option update to its value as of August 25th. So very quickly, we can place trades, we can update the progress of those trades. If I go to the chart now, we're now looking at a chart as of August 25th, and you can see price has fallen now, which has benefited this. Did I say long call? This is a long put that I bought. Ted says, so even though it's available only on a real money platform, any trades are really paper money trades, correct? Absolutely correct, Ted. And if we shut off Thinkorswim, go back to the live platform, or not shut off Thinkorswim, but we shut off on demand. So for example, if I click this and it just closes down on demand, we're now back to just our normal live platform and looking at our normal live trades. And then if I think, wait a minute, I want to go back and look at that eBay trade I had on, this does not disappear. All right? It doesn't disappear. It's just preserved in that historical environment, that paper money historical environment, and we can go back and check up on that trade. Now, that is, unless I want to click the reset button. If I click on reset, I can just reset the time to come back to 2025, or I can reset the whole account. That's resetting this historical paper money account. So that's a pretty nifty tool. That's our on-demand feature. I would encourage you to jump in there, explore it, check out how do we change the time. We can advance time forward, or we can advance, or we can retrace through time. You will discover that some functions don't work historically. So, for example, we can't go run scans that's just way too much data. Go back and run scans back in 2022. We'd have to preserve all the fundamental data, all of the charting data, all of it. It's too much. But the trading capabilities are there, the monitoring capabilities are there, even the analyze capabilities are there. Guys, I'm going to call that top. That's top tool number 5. And with that, we've accomplished what I set out to do today. Now, I wanted to give an introduction to what I consider to be my 5 top tools on Thinkorswim for options traders. But I'll bet there are some of you are thinking, yeah, but you missed another cool tool. Go ahead, leave a comment if you'd like. Let me know what your favorite tool is. If you think I missed something, I'm certain I did. Let me know. But I want to make sure that everybody's aware of some resources that you have. If you are intrigued by any of these tools, you want to learn more about them, here's what I would suggest you do. Number 1, make sure, if you haven't done this already, make sure you subscribe to our Trader Talks channel on YouTube. The full name of the channel is Trader Talks Schwab Coaching Webcast. You can subscribe by going down the lower right-hand corner, clicking on that subscribe button, or you can just go down below the video stream, click subscribe. It only takes a second, doesn't cost anything, but this is where we house all of our previous webcasts, including a whole bunch on these tools that I've just introduced you to today. So you can go find our playlists of previous webcasts right here. Or here's what I'd suggest you do. let's say you had an interest in something like, maybe it was that on-demand feature. You can do a keyword search through our playlist archives. Let's type in on demand, just hit enter here. And what do you know? Here's what was this? About a 25-minute video that I did where I explored that on demand feature in much more detail. You'll see it's much more structured than today's very high level introduction, but back testing a new trade strategy with thinkorswim's on demand. If you're interested in the risk profile tool, just type in risk profile here, and you'll find, hey, there's Let's Learn thinkorswim's powerful risk profile tool. And I think this one was 25 or 45 minutes going deeper into that tool. Jim E., you tuned in late. That's okay. Well, welcome. It's great to have you. If you need to catch the recording of this session, this is scheduled to be added to our playlist. So make sure that you've subscribed. Go to the playlist, and you can find, if I go to playlists here, I can just scroll down, and this one, we have so many webcast series. This one just happens to be the playlist at the very bottom. Getting Started with thinkorswim. There's the full playlist. If we click on that, and you can see last week we talked about 5 cool stock chart tools you didn't know were on thinkorswim. Okay, so that's one additional resource you have. These archives. Make sure that you're subscribed to the channel. Another thing that I would suggest is that you follow Kevin and me and your other favorite Schwab presenters on X. If you have an account with X, give us a follow there. It's the best place to connect with us in between these live streams. So you can find Kevin there at Kevin Horner CS. You can find me on X. Here's my handle at Cameron May CS. But this is where I can go, if the camera's not on, but there's something I want to talk about with my friends and my internet associates out there. I can post things like, hey, you know what? According to the internet, the 3 most common stock chart indicators are some form of moving average, the RSI, and the MACD. Hey, chartist, what's your number 1 go-to chart tool? And so I just gave a few choices here, and people are replying to me, and then I just reply right back to them, and we can have kind of an interesting conversation that way. But this is the best place to connect with us in between these live streams. So if you reply to one of my posts, I try to reply right back to you. All right. Sarah says, what are good videos to start using this tool from the very start? Great question, Sarah. I do definitely have a suggestion for you. Just concluded, just very recently, in this playlist. So let me go right from the start again. So if we're on our channel, go to the playlists, and then scroll right down to the bottom to my playlists. View the full playlist for Getting Started with thinkorswim. I put together a series of 8 structured lessons that start with just how to download and navigate thinkorswim. And then we basically go, left to right, top to bottom through the tools on thinkorswim to get acquainted with them. So that's where I would start if I were brand new learning about thinkorswim, right there with lesson 1. All right. Okay, everybody, I hope this was a helpful discussion. This is what we do with our Wednesdays when we have our Getting Started with thinkorswim discussions. I'll look forward to talking with you next Wednesday. But a couple of final reminders. Number 1 is this is your opportunity to fill out that survey that's in the chat window. If you fill that out, I promise you, I'll read that survey feedback. So that's definitely appreciated. I can also see of the 127 people watching the live stream right now, 45 have clicked the thumbs up or the like button on YouTube. That's appreciated. If you wondered how to applaud your presenter, you can chat in and say, nice job. You can also click that like button. But the like button has an additional benefit to your presenter. It gives a boost to the webcast in the YouTube algorithm, helps more people find these things. And we work hard to make these as educational as possible. So if you want other people to learn how to use thinkorswim, click the like button. It's definitely appreciated. All right, everybody. Thanks a lot. I will see you in a future webcast. I'll also look for you on X. Kevin, thanks for helping out, guys. But whenever I see you again, until that time arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.